There is blood in the streets on Twitter, Discord, YouTube, everything. Absolutely crazy. Everyone's panicking. We're currently looking at a $29,600 Bitcoin at the moment. Everyone's freaking out like, oh, is this the big moment? Are we about to drop 8K on the way? Like, everyone just needs to relax, okay? I'm not going through the intro. I'm not going through all of that. Of course, you guys know the drill. If you want to join the Patreon, if you want to see my trades, technical analysis, research reports, early access to videos, and more, go down to the link in the description, check it out. But we're going to jump straight into the charts here because I think that people are freaking out and people just need to relax, okay? Now, you guys know me. I tend to be a little bit more of a pacifist whenever it comes to crypto, whenever it comes to investing in general. I typically just don't freak out because there's no point in freaking out. You freaking out is not going to change anything, right? So let's talk about what we're seeing, what some levels are, and then what my anticipations are and how I'm playing it, okay? So I think it's important that we look at this thing on short-term, mid-term, and long-term perspectives, okay? Let's start with the short-term and what we're seeing. What we're seeing right now is definitely not looking the absolute best, but it could be worse. So what I'm seeing at the moment is something of a expanding wedge. Now, what does that mean? I don't like them, right? Because typically these lead to just more and more volatility. Higher swings, higher lows, higher swings, higher lows, and you break out in one direction or another, okay? That's what I'm kind of seeing on the short term. Okay, let's exit out of that. There we go. So it's really nothing crazy, but one thing that I will say is that on the short term, things are looking a little bit more bearish simply because we did clear our previous level of support. Now, that's very short term because we still have not closed yet. We're still in the dailies. We have not closed yet, and we still have a good few hours to recover those levels. So nothing too worrying is happening. I would say that it is actually a better sign that we did see that we were able to set this higher high than we saw in these previous times, because that does show that once we do gain some momentum, that there is still the upward momentum, but we are still seeing that big selling pressure once we get in the 40,000 range, as people are trying to just get out because they're nervous about the future of the market. Okay, so on the short term, things are looking a little bit bearish, but it will be very important that we do keep this level, and I'll explain a little bit more, just exactly why we need to keep that level here now. So what are we looking at more on the midterm, right? This is when it gets important, okay? And this is what I want to focus on more. And I'm going to kind of not do education on this, but I'm going to kind of just show you guys what all I'm seeing and how these typically work, okay? So what I want to point out is a few different things, okay? Let's talk about what Fibonacci retracements look like and what we need to see. So let's talk about Fibonacci retracements. This has kind of been my big focus in the Patreon this week and on here. I've just been kind of trying to show you guys exactly just how some of the, not exactly just how it works, but just more in terms of what you can look for, right? So let's talk about, let's see if we see something like this, right? We saw up here. Let's see, we set a high here. Boom, we set a low here. So we have a line something like this, okay? Well, typically speaking, you'll see that support, you'll start to see a bit of growth there, right? You'll typically see some type of growth. Well, from there, we use our Fibonacci's in order to anticipate where we are going to see that retest, right? There's 4 levels that you will typically see it retest to. 1, 2, 3, 4. The 382, the 0.5, the 618, and the 786. Those are your 4 main levels, right? Typically, you'll see something like this. If you're in a downtrend, boom, a touch, a fall. Or boom, a touch, a fall. Or something like this, right? Maybe something like that. But it's always going to typically establish some resistance at one of these levels. It's very, very, very common. Okay. Well, let's translate that now to Bitcoin. Let's see what we've seen. Okay. So what we've seen from Bitcoin is something very similar. We set this high here. We set this low here. We set that low right there. Beautiful. And as we can see, boom, the fall. We knew the retest was coming, right? All of these little fake ones, I was like, no, I don't buy any of these as being the top. We need to see it touch at least the 382. Boom, touching of the 382, and now the fall continues. So what happens now? Okay, well, if we look at this, let's go ahead and just exit out of here. There we go. Boom, sauce. Cool. All right. Well, what happens now, right? So we go up here, we touch, we establish this resistance, and we're not able to maintain that level, and then we fall. Well, our next key level, again, is going to be this low that we previously established. Okay, that's going to be very, very crucial. I wish it would let me do that, but it doesn't. It's so annoying. Okay, there we go. So this is going to be crucial because this is going to dictate whether or not we are going to see some type of W-shaped recovery, or if we're just typically seeing our dead cat bounce or some type of general retracement back into a fall. Okay, so what that means is that we are more than likely going to retouch that level. From there, if we aren't able to maintain it and we fall, we are then looking at a bigger fall. Okay, we're going to more than likely see, like our 1, 2, 3, 4, our ABC. It is going to be a pretty dramatic drop. Okay, or if we are able to maintain this level here, boom, Then we start to see, okay, well, let's talk about this on more of a short-term perspective. And trust me, I'm going to translate all of this over to exactly what we're seeing with Bitcoin. Just let me explain this, okay? So from there, now we need to figure out, okay, what are our short-term goals? Well, we can take our fibs and we can find out. So let's do this. Let's go, boom, boom, boom. Here we go. So let's go there. So what we can see from that point forward is that if we start to establish this upward momentum, we're then looking to start to clear these fibs here. And as we clear each one, as we start to bypass them, that is going to show better and better signs that we are looking at that W-shaped recovery. So again, what we're looking at, boom, we maybe hit our heads, but we establish support. We surpass. Boom, hit our heads, establish support. Boom, hit our heads, establish support. Boom, big breakthrough. And then that's when you will see this W-shaped recovery happen. Okay, that's important. What signifies a downtrend here is boom. If we even if we do somehow, work our way all the way back up, but then fall back below, and then we see closings below this level, it signifies a further drop is coming. Then we have to look way back in the past to see where our next level of support is going to be. So let's translate all of this, what we just said, over to Bitcoin. Let's leave that. Okay. So let's see what we're seeing at the moment with Bitcoin's real life price. Okay. Let me get rid of all of this. All right. Let's talk about it. So what we're seeing at the moment is something very similar, okay? Let's talk about what we just saw. Boom, that was our low. That was our previous low, okay? We saw this big fall, just like this. Boom, big fall. Boom, and back up, okay? Now remember, guys, what did we just say? What's going to be important is as we do fall and we retest it, just like we talked about right here, okay? Look how similar. Just as we talked about, what is going to be important is that we close back above this level. Okay, if we close on the dailies below this level, that would not be a good sign. And there's a high likelihood, in my opinion, for us to retest the high 27,800 to the 27,500 range. And I'll go into why that specific number in a second. So with that being said, what I'm looking at for today is a closing above this level. Well, some people might say, well, we're already below it, so isn't that a bad sign? Yes, it's not the best sign, but it does not mean absolute impending doom. This is going to be January of 2021. So let's talk about what we saw here. Okay, sure, the same thing. We set this high, we fell down to our low. Okay, boom. Now let's take our tool and let's draw where that low is. That's our important point. So as we saw, boom, bang, all the way back up. Did a fantastic job. Look at this. Look at this. Look at this. We went up. Boom. Touched these levels, cleared them. Boom. Support. Touched these levels, cleared them. Resistance. Support. Boom. All the way back up. Then we fell. So this is where we are right now, right? This is where we are in real life. So we went up. We touched our point of resistance and we fell back down. Okay. This is exactly where we are. Boom. Up. Touch our point of resistance. We fell back down. But look how it reacted here. Okay. This is important. Look how it reacted here. So what we saw is that off of that level of support there that we established, we never closed below it. No close below it, no close below it at any of those given points. From there, we use that to establish that support. And then if we zoom down to the 4-hour, we can see how we then interacted with all of these different levels. Let's kind of zoom this out a little. Here we go. So again, guys, let's go back out here. Cool. So as we can see, we established that level of support. We went up, touched, bang, support. Nope, not breaking through. Boom, resistance, support. Boom, resistance, support, resistance, support, resistance, support, breakout. That is what we went over. That's exactly what we went over earlier, right? And that's what we need to see from our price right now. Okay. So what I mean by that is as we are falling, the lower we fall, the less likely it is that we're going to close above it, right? But it's still possible. So by the end of the day, when this daily candle closes, we need to look, where did it close? If it closes below this level, we are probably, in my opinion, more than likely going to see a continued fall. If that happens, well, where does this go? Let's talk about where that goes. Okay. So in order to do that, we went over the short term, we went over the midterm. Well, now we need to talk about the long term. Okay. From there, we have a few different levels that pay close attention to. We're going to be basing all of this off of our previous levels of support, and we're going to have some implications from our Fibonacci retracements as well. So let's extend this line all the way out here. This is our last level of support. This is the lowest level of support that we had since December of 2020, so basically all year, okay? What this is going to look like is if we do break this level, then I think that a fall here is going to be very, very, very likely, okay? But the crazy thing about this is, it's crazy how the Fibonacci's always come into play. And let me explain what I mean. Well, if we take our low here that we set in March and we go all the way back up to our high, I want y'all to notice something. Let's set that there. Boom. And then let's make sure that all of our levels are drawn perfectly. Okay, let's, boom, there we go. I want y'all to pay close attention to something. And now that we have zoomed out, we can kind of see that that's not very straight. Look at how, let's go there. Boom, boom, boom. Look at how this plays out in the long term, right? Let's see. And then I got to lower this a little bit. There we go. Boom. Okay. Look at how perfectly this plays out. Look at this very small gap. So what this tells me is that this support level has been established way before any of this even transpired. It doesn't surprise me whatsoever. Okay, and so what I mean by that is if we do see a fall, this little region here, because these lines aren't exact points. These lines are regions, right? So my anticipation is that if we lose this level, if we're unable to close above here, right? If we're unable to work our way back up there, a further fall, a continued fall from where we are now of probably about 7 to 8% is highly likely. Highly, highly likely. From there, we got to get back into it. Let's think about how these Fibonacci retracements work. Let's talk about this on a long-term perspective. So remember, guys, remember what we went over today, okay? Remember what we went over today. We saw this climb. Boom. We saw the fall. Boom. Say we touched that. Well, guys, what do we need to do again? Let's think about that. Well, likely, we're going to see a bounce, right? The bounce is going to come. What's important is this on a more long-term perspective. Let's think about it. On our fibs, we can take it. Boom. Boom. We take it. Okay, where did we go? There is a very high likelihood we could see a bounce all the way back up to these 40,000 ranges. And then you guys know the drill. Establishment of support, growth, establishment of support, growth, establishment of support, growth. So what my anticipation is, all I'm looking at right now, at this very moment, is if we do lose this level, can we reach, or, and when will we reach this 27,500 to this 27,000? That's my next range. A fall below that, likely, I think that we could see a fall. I know you guys might not want to hear it, but there's a high possibility that this region here, where we set these previous resistance and supports, is very possible. Okay, and so that's our next focal point. Okay, that's our next focal point, and that's what we're looking at. But what I will say is that on the short term, if you are trading this thing on the short term, that a bounce is very, very likely, and a bounce is very near, in my opinion. I think even if we do start to set, a fall, we're gonna see that growth. And so my short term targets is that if we are able to work our way back up and maintain this level, okay, say we work all the way back up here, I think a bounce all the way back to let's say if we close, let's just go here, fine, that's the lowest low we've set so far. I think a bounce at bare minimum to the 33,700 to 34,000 is very likely, as it always happens, right? We always see this happen, boom, 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 okay? Or, again, let's talk about bullish, boom, 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 okay? But we typically see that bounce happen. So what I'm looking for is if you are looking to exit, if you want to get out because you're nervous and you bought in at 35,000 and we reach back into this zone, that's the exit. Okay, that's the take profit opportunity or this the get out opportunity, right? Selling right now just doesn't make sense. Okay, just for me personally speaking, it just doesn't make sense. Sure, we could fall here, but selling on red candles doesn't make sense when we know that the green candle will come eventually, and then that retest will more than likely go higher than whatever you sold out at down here. Okay, so that's what all I'm looking at right now. Again, I really just wanted to show you guys, like, you have to just take emotion out of it. Nothing I said right there was emotional. I'm simply focused on what the chart gives us and what we've seen in the past to anticipate what we'll see in the future. Okay, with that being said, guys, we just need to pay close attention. Where does this thing go? Where does it establish support? And if it can't establish support, where's the next level? And we're buying at all of those support levels because as it does start to work its way back up eventually, we will start to build up that position so well on those bottoms. Imagine you buy, boom, you bought here, boom, you bought here, boom, you bought here, boom, you bought here, and then it goes all the way back up eventually. Look at the amount of dollar cost averaging you did that is going to break you even, break even, break even, break even, and then you're up 30-40% in comparison to had you just waited it out. When you bought here, you lost a little bit, didn't buy anything, and then it goes back. You don't break even until all the way up here, and then maybe you're up 10%. Use these opportunities. Use it as a buying opportunity. Don't go super heavy cash in. Don't put a lot of cash into any buys. That's my personal opinion. Don't put all your money in here. Don't put all your money in here. Don't put all your money in here. Let it slowly ladder your way in, especially if you're a long-term investor. Slowly put it in, and then as it does go up, you can slowly start to work your way out, or you just enjoy the ride back up, okay? So that's that, guys. Just take the emotions out of it and do understand we all know. No doubt in my mind, 10 years from now, 5 years from now, Bitcoin, crypto, all of these big cryptocurrencies are going to see massive growth over the next 5 years. I don't care what happens in the next year, what happens in the next 2 years. I have no doubt that within the next 10 years, we see Bitcoin $250,000 plus. We see some of these other cryptos starting to reach 10,000, 15, 20,000. No doubt in my mind at all. So what happens in the short term is not important, but what is important is how do you utilize that time in the short term to maximize efficiency, maximize profits in the long term as we do capitalize on the revolution of one of the biggest revolutions that the world has ever seen. So with that being said, that is all I'm saying for today, guys, and I will update you guys if I do see anything else. If you did enjoy today's video, of course, you can let me know by smashing the like button. I do all of this technical analysis. I give all of this information every single day in the Patreon, so definitely go check it out if you are interested, and I will see you all very, very soon. Peace.